Have you noticed your grocery bill creeping up? Why does bread, milk, and eggs cost more than it used to? There's an invisible thief at work, quietly eroding the value of money you earned. That thief is called inflation. And today we're breaking down what it is, why it happened, and how everyday prices got so high. Inflation means prices across everyday items go up over time. When prices rise, each dollar you hold buys less than before. That loss of purchasing power is exactly what makes everyday life feel more expensive. In early 2020, the COVID-19 pandemic hit. Countries went into lockdown, factories shut, ships waited in port, supply chains, the systems that deliver goods, were disrupted. Fewer goods meant higher prices. To keep economies alive, governments pumped money into the system through stimulus support. Suddenly, many consumers had cash, but supply was still tight. More money chasing fewer goods is a recipe for rising prices. Even though overall inflation has cooled from its peak, grocery prices remain noticeably higher than they were before the pandemic. According to U.S. Bureau of Labor Statistics data, from 2020 through 2024, overall food prices increased by roughly 24%. Food at home, meaning groceries, rose even more sharply in some periods. In just the past year, food prices increased around 3%, which is slower than the spike we saw in 2022, but still higher than pre-pandemic norms. What's important to understand is this: even when inflation slows down, prices don't usually go back to where they were. They simply rise more slowly. So when you feel like groceries are permanently more expensive, you're not imagining it. The data shows that the price level itself has shifted upward since 2020. Let's look at specific examples using recent government price data. In early 2026, average ground beef prices were roughly $6.75 to $6.82 per pound in many U.S. regions. For comparison, in 2019, ground beef averaged closer to around $4 per pound. That's a substantial jump over just a few years. Fresh whole chicken currently averages about $2.04 to $2.16 per pound. While chicken prices have been more stable than beef, they still reflect increases compared to pre-pandemic levels. Flour averages around 56 cents to 57 cents per pound, and even staple baking ingredients saw noticeable increases during peak inflation periods. Egg prices are another striking example. In 2022, egg prices spiked dramatically due to avian flu outbreaks that reduced supply. Even though they later came down from those extreme highs, they remain more volatile than before. These examples show how multiple factors — supply disruptions, feed costs, fuel prices, labor shortages — all compound together and push everyday grocery bills higher. So what exactly caused this surge in prices? It wasn't just one event, it was a series of overlapping shocks. First came the COVID-19 lockdowns in 2020. Factories shut down, meat processing plants slowed, shipping containers piled up in ports. When supply chains break, it becomes harder and more expensive to move goods from producers to consumers. Then came massive fiscal stimulus. Governments injected trillions of dollars into the economy to prevent collapse. That money supported households and businesses, but it also boosted demand at a time when supply was still constrained. Next, in early 2022, Russia invaded Ukraine. This had global ripple effects. Ukraine is a major exporter of wheat and grains. Russia is a major energy exporter. Disruptions in those markets pushed up food and fuel costs worldwide. Higher fuel prices increased transportation costs. Higher fertilizer costs raise farming expenses. Those costs eventually show up in grocery store prices. On top of that, tariffs and trade barriers increased costs on certain imported goods and raw materials. Even small cost increases at the production level can multiply through the supply chain. When you combine supply shocks, stimulus-driven demand, global conflict, energy price volatility, and trade friction, you get broad inflation pressure across the economy. Since early 2020, some foods have risen much faster than others. Government data and price analyses show that beef products like roasts, steaks, and ground beef have seen some of the largest increases in price over the last few years, climbing far more than many other food items. Official inflation numbers, like the Consumer Price Index, are broad averages that include many categories. But if your personal spending focuses on food and energy, it feels worse because those categories often rise faster than the overall average. Inflation reduces the value of cash over time. One way people think about protecting their financial well-being is to consider ways to grow their financial resources over time. This sometimes includes investing, earning returns that may keep pace with or outpace inflation. It's important to note, investment is one possible strategy people use to try to maintain purchasing power. But it's not the only thing. Budgeting, saving smartly, and reducing unnecessary expenses are also key parts of staying financially resilient. As of early 2026, inflation has cooled significantly from its peak in 2022, when annual inflation reached around 8 to 9%. More recently, overall inflation has moved closer to the 2 to 3% range, which is historically considered more normal. However, here's the key distinction. Inflation slowing down does not mean prices are falling. It means prices are rising at a slower pace. For prices to actually decline broadly, we would need deflation, and that is rare and often associated with economic downturns. Food prices, in particular, remain elevated compared to 2019 levels. Even if annual increases are smaller now, the cumulative rise over several years has permanently shifted price levels higher. That's why many households still feel financial pressure, not because inflation is accelerating today, but because the baseline cost of living is now higher than it used to be. So that's inflation. The invisible thief that slowly erodes the value of every dollar you spend. From pandemic supply shocks to global events and price shifts in food and energy, we've broken down how everyday prices got high and why they feel so sticky. Understanding inflation helps you make better financial decisions, whether it's budgeting, shopping smarter, or thinking about how to protect your money in the long term.